Similarly, look at this bank nifty's chart. Now this is the same 5-minute time frame again. Let me draw a stable point. Look at this. This is the stable point. If you check the volume charts now, when price is in a tight range, volumes, look at the volumes. This is the start of this range. Until this, only few candles are going outside the stable point, and when price making a breakout, we are getting a increase in volumes. Now very important is when price is moving in the direction of downside, very important here is volume should increase. Yes, volumes are increasing, but at this point of juncture, when price is making a new low, look at the volumes. When price is making a new low, volumes, the increasing volume started decreasing straight away. This case is giving an immediate hint that the sellers who have created or pushed the price lower are somewhere lagging, or they are not a clean strong sellers. And it is getting more confirmed. Look at this, volumes are increasing in the down move, and when price making a new low, volumes are coming down, and in next continuous candle, volumes are below the stable point. So this is a clean alert. If you are on a short side trade, this is the clean volume alert that you need to exit your positions. You need to immediately exit your positions. If you are on towards the short side, immediate exit by buying it and wait. Okay, if you have not carefully monitored the volume shift towards downside, that is what I said, when markets shifting from balanced to a trending mode, it can be uptrending or a downtrending, trending in a down mode, very important that when price is coming down, volume should increase, and when price is moving up, volume should increase. It should, like in this example, look at this, increasing volume straight away downside. Look at this, the volumes are coming down straight away, and in the series of candle, it is trading volume is below the stable point. That is a bad sign or a bad hint. If you have entered a short side trade, this is an information given by the chart to exit immediately. Clear? Now look at this. Once again, it was a small balance to move. Price was into the stable zone. When price made a breakout, and next candle has broken the eye of the breakout attempt or made by the buyers. Look at the volumes. None of the candle came below the stable point. Every single candle price was moving up, up and up. All the candles volumes were above the stable point, and very important, this red candle which has came in, the volumes were below stable point, and once again when buyers pushed the price further on towards upside, again price came above the stable point. So now what is the information? Balanced to trending. Now volumes are increasing, price is increasing. That means price increasing and volumes also increasing, buyers are more interested. Okay. Same way, when price again came, made and sellers from the higher level made an attempt to move the price lower. Now look at this. When an attempt is made from the sellers to move the price lower after a strong up move with good or a great volumes, when price came down, look at this, most of the candle again was below the stable point. Only one and two candles were managed to have volumes greater than above the stable point. But remember, when you compare this volume, when the buyers came in to push the price higher, and when you compare this two volumes which came above the stable point, is not greater than the prior volume or relevant volume or previous volume where buyers dominated. So this is not a strong selling. Look at this. On the next upcoming candle, price again went up. Now look at the volumes. Volume shooted up and volumes were above the stable point again. So very clear clue that buyers buyers are dominating. If you have not closely monitored when price was shifting from balance to a trending move, again balance to a trending move, in this point, if you have not monitored this volume drop, then you were end up being a loser, or you would have lost your money if you have shorted in this point without monitoring this volume drop. Clear. Now, one scenario which can be played out here is balanced market shifting to a trending mode. Again, it is in a balance. Now, what I will suggest is, if there is a volume drop, very important here is just mark this range. Okay. If you have taken any short side trade or if you have taken any short side trade and price is shifting downside and markets into a balanced territory with volume drop, mark this high and low of this balance. If the high breaks, immediately exit, and if the low breaks with volume, just stay on this trade. This will be more clear. Okay. Sometimes what happens is markets, stocks will be in a balanced mode, it will shift to a trending mode, again it will go into a balanced territory. So now mark this range high and low. If the high breaks, exit, and if the low breaks with volume, wait, because the sellers, if the low breaks with volume, the range low breaks with volume, the sellers have made a small pause and they are continuing the down move. This down move will be more stronger than the first move. This is completely from my experience. I will repeat once again. It is price in a balanced shifting to a trending mode and again going into a balance. Mark down this high and low of the range. The price breaks on towards upside of this balance. Exit your short side trade immediately at this location, and if it breaks downside with volume, monitor the price, what is happening. If the upcoming volumes, price is coming down and volumes are increasing, then very clear this first move and the current move which we are getting, that is second move, which will be stronger. If you ask me, I will tell the second move will be more stronger and the second move fall will be more bigger. Okay.